We are closing out what looks to be a down week in the markets. Crypto is down. Dow, Nasdaq, S&P, they're all down today. You know what else is down? Consumer sentiment. We'll talk about that in a little bit. We have a lot going on in the markets. It may not seem like much is happening, but there's plenty to talk about. Don't you worry. So we'll jump into that momentarily. Before we get going, hit that like button for us. Subscribe to our channel. Nothing that Kevin or I say is financial advice. We are not financial advisors. We're a few guys who love following the markets. We're doing the best we can to provide as much solid information as possible. So please do all of your own research before making any buys or sells. Kevin, no huge reports came out today that moved the markets too much. We saw a few things. Number one, consumer sentiment came in at its lowest number in years, under expectations. Also saw another piece of data that showed that the 5 to 10 year expectation for inflation is around 3 to 3.5%. Don't think the Fed loves seeing that. We're hearing more and more talks. Ace, good to see you, buddy. More and more talks, which you and I have discussed for a while, that the rate hiking is not done yet. We heard from one of the members of the Fed. She brought up the fact that like they can't necessarily slow down if the data doesn't call for it. So markets are kind of reacting to that today. I think that's what's causing some of the red, especially in the Nasdaq. We see a lot of the big tech companies are down decent amounts, 0.5%, some of them up to like 2.5%. So a lot to talk about there. How are you feeling about the markets as we close out this week?
Yeah, it's boring, man. We really need some dynamite up in here. Like we need something to fall. And you and I were talking about this beforehand. It's like the weeks where things trade off data, it's either extremely volatile or it's just absolutely dead. And right now we're just kind of like in this lull, and it really sucks because everywhere you look in these charts, everything looks extremely overbought. I mean, crypto's been having, I guess, a good move. At least it's been moving. But it's not it's not as fast paced as it once was, and that could be because it's just low volume, or it could just be because someone's just propping the price up around these levels. But I haven't seen anything to the point where it's getting me really super excited. I think they were still waiting for something that's just gonna, spark the markets, one way or the other. It's fine, but this has been absolutely just like Chinese water torture, like you said.
We've been talking about like the meme coins going around, Pepe, there's all sorts of other ones. I'm wondering, with that, how much of that is really propping up the price of ETH right now? ETH being held in liquidity pools, ETH being used to transact, all that stuff. And once meme coin season, inevitably runs its course, do we start to see a greater pullback in ETH there? We've seen a ton of ETH getting burned due to all the transacting going on, which is, from a deflationary standpoint, long term, that's great. But that can only prop up the price for, a certain amount of time. And that, I think, is coming to an end. And people are like, oh, yeah, these meme coins are great. And if you're having fun with it, whatever. But if we see some bigger economic hardships, you can bet your ass that people are not going to be holding on to their meme tokens, to their Pepe, to whatever ENU number we're on at this point. Like, that ain't happening. So it has been pretty boring. We've been, trading in this range. We see the S&P, still just like hanging out in this 4,100 range, where it's just been living for months now. And eventually something's going to give. Like I said, we see a lot of people. I still think a lot of people are just not taking the Fed at their word, which they've been tipping their hand the entire time. They have not, and like, I think to their own detriment, they haven't pulled any wild cards out of their sleeves. At no point did they pull a surprise, amount of rate hike. Everything's been priced in, and that pricing in has been accurate. So it seems like we're just going to kind of be sitting here next week. There isn't a whole lot of data coming out that is going to really move the markets. We don't see that until the last week of the month. We'll get some Fed FOMC minutes, we'll get some housing data, and we'll get the PCE. But outside of that, like next week, I think is going to be another one of those really boring, choppy. Each day, the major indices are moving between like down 0.5% and up 0.5%. That's how I'm going into next week. Now, like you've said for a long time, it happens when you least expect it. So maybe something big happens next week. But, as of right now, the trend has been data around inflation, and which will impact the Fed funds rate is what moves the markets. And we got really nothing of that coming out anytime soon.
Yeah, I mean, the only thing I could see being like kind of shitty going into this is the debt ceiling, getting pretty
Yeah.
close, right? And I don't know if this is a scenario where, again, I tweeted something out yesterday where we see a similar setup in 2008, where May we saw the sell off, and I wouldn't be surprised if people, we start getting really close. Kind of seems like uncertain what's going to happen with this. People might think the U.S. is going to default. Then next thing you know, everything's fine. So everyone that was selling into it, they start buying it up. Maybe it rallies a little bit for a month or so, 2 months, and then we're just right back where we need to be, September, October, end of Q3, start of Q4, and then we start getting maybe some of these earnings, or people are expecting earnings to be terrible. And then next thing you know, we're in this absolute downward spiral to the bottom of the market. That's one scenario I'm thinking could play out. But again, how important is this debt ceiling going to be? Do I think it's going to get down to the wire? Yeah, I really do. I always does, doesn't it? Doesn't seem like that's
So
ever going to change.
I believe 2011 was the last time that we came like this close to defaulting. Um, Here's the thing, though. Things are a lot different since 2011. Like the civil discourse when it comes to politics has gotten markedly worse. And I hope this doesn't happen, but it wouldn't shock me if the Republicans and Democrats are too hard-headed, no one's willing to budge, and like something does happen, and this is what causes the market to break. So I hope that doesn't happen. I hope they get this shit figured out. And we can just like move on with our lives. But I'm not ruling it out entirely. I think there are plenty of people out there who are like, oh yeah, they'll get it figured out because they've always gotten it figured out in the past. I don't know. I'm no political expert here, but I just don't. These people like are acting a fool right now. Is the best way I can put it. Like on social media, everywhere. So it wouldn't shock me if we came to a point they just don't agree because the Republicans desperately want to regain control of the White House next year, and they kind of force this situation where the U.S. defaults, and then they can just blame that on Biden heading into the next election. But that's enough talking about politics, I think, for today.
That's actually
we
a
can
pretty
move
good.
on.
That's a pretty good point. Yeah, I mean, obviously, I think that if Congress is gonna, that we have a Congress that probably should be on True TV and not C-SPAN, if you know what I mean. I think that would make the most sense. But yeah, it's absolutely wouldn't be. I'm not close to the idea that we actually do default. I mean, that would be pretty fucking sinister. You know what I mean? If they actually do that,
real bad.
But yeah, but I mean, there's a first time for everything. We saw that in
Janet
2008.
Yellen would shit her depends if we ended up defaulting. Like, watch out below.
She's not wearing any. But yeah, the thing is, it's like Congress kind of is in this position where on both sides they're at fault. They're in fault for inflation largely, and they're also at fault if they default. So
and you know how much responsibility they're going to take? Zero. They will blame it on everyone else. Exactly. So, all right, I think it's enough politics. Let's look at some of the charts because I know you've been kind of eyeing, NASDAQ, S&P, a lot of stuff looking overbought, and that is not great considering we're also seeing red out here. So if it starts moving down, look out. So why don't we pull those up and dive into them?
Yeah, absolutely. We're gonna start with the DXY because again, everyone knows how bullish I've been on the DXY, despite it just being on an absolute downward move. Get out of there. Downward price movement since September, but we saw that this 102.035 was resistance here after we found support at 100.845.
Real quick. Will you I think it's important to kind of do a refresher every now and then of why you view this as such an important chart to look at when it comes to the overall markets. Like, I think we can get kind of lost behind that sometimes, assuming that everyone understands that point. So if you could, jump into that here for a minute.
Yeah, the DXY is pretty much the strength of the dollar against other assets. So obviously, if the dollar is going down, risk assets such as Bitcoin, stock market, anything like that you can trade, or the value is going to go up because you need more US dollars to transact and purchase these. It's pretty much the purchasing power of the dollar. And if you look at when the dollar goes up, usually risk assets come down because the dollar has strength over those assets. So it's a matter of seeing how the price of the dollar is going to impact your purchasing power against risk assets. And right now today we've seen a pretty good move to the upside. So from this, I'm not surprised that we're seeing some red in the S&P, NASDAQ, Dow. Is this a really good move? I think it's a pretty good move considering that this was resistance here and we're on the final day of the week. So if we close this weekly out, we're definitely going to be above this blue line here. And the key is we're extremely undervalued here on the stochastic RSI. So I don't think we're going to see another, candle that comes back down into this range, I think that we're going to probably trade, sideways above this level of support here and then begin our, move to the upside, because this is a massive way to close a week. And I'm extremely bullish on this, especially since we found support here. We got our double bottom, and it looks like that we were just primed for, this summer. I think the dollar is just going to absolutely tear, and it's going to be the dollar of the summer. Right now,
the summer of the dollar, you mean?
No, the dollar of the summer.
Dollar of the summer.
I meant to absolutely mess that up because I'm still young. I don't know how to speak properly. But yeah, it's the now I don't even know which one it is. Like
it's the summer of the dollar.
Neither sound right to me in my head now, though.
Maybe they're both right. I don't know. All right, keep it going. Let's keep it going. Keep it going.
Yeah. So obviously on the daily, we're above the 50 moving average. Probably going to climb our way up to the 200 on the daily. We got a little bit more room on the daily here on the stochastic RSI, but I do think that we are in room for a correction. So maybe that correction just comes and we find some of this support at 102.035 is our, new support line as we break through this resistance, becomes support, and that's going to give us a base to start moving to the upside if we look at some of the higher time frames, such as the weekly and the monthly. So dollar's looking great to me, and if we zoom out, because it's always good to zoom out, and we look at the macro. We talked about a W-shaped double bottom where we hit one here, we come up, get rejected, come back down here, find support, and then we make our move to the upside. And it looks like we've done a pretty good job at that so far. And if this continues, then that's a perfect W double bottom, and we're probably going to be climbing towards some of these resistance levels that we once had as support. I think they were most likely going to be clearing these, as we are extremely undervalued. And then again, we're above the 200 EMA. These two have not crossed. The price starts moving up. 50 is going to start moving with it. 200 is going to follow. And that's probably going to take us into the end of the bear market. So I think the dollar is on its last macro leg. We're not going to see it trade sideways like this for a while. I think this is going to be the last time we go make our way to the upside. And then once we finally get this high, that's going to be the end of the bear market. We're going to start seeing absolute blood and capitulation across, equities and crypto. And I think that's going to be our conclusion to the saga of the DXY.
Okay. So let me recap this. If you're watching this and you don't do the charts like me, Kevin's the chart guy. I'm not the chart guy. Let me recap. Keep cash on hand. Protect your capital at all costs right now. Okay. And continue as best you can to save money here and there, make more money here and there, whether it's, picking up little side hustles, whatever, go mow your neighbor's lawn. But right now, cash is king. That's what you should take away from it. If you take nothing else away from what Kevin just said, cash is king. You want cash on hand because we are going to see risk assets continue to bleed. You're going to see opportunity to buy high value stocks, crypto, any other asset at lower cost in the future. So just have cash on hand. Does that sum it up okay there, Kevin?
That's perfect. And again, I think that's probably the best explanation just for everything I just mumbled about. But if we look at this here, this is we're early. I think we're early, to be honest. I think that this just shows that you have a lot of time to accumulate some cash and build those cash positions ready to buy some assets when the time is right. And again, the time is right when there's absolute blood in the streets. We're not there quite yet, but we're going to get there. This chart is telling me that it's going to be pretty bloody.
Yeah, if you didn't watch it yet, go back to earlier this week. We kind of talked about preparing for, making the most out of this market. And so, what part of that, budgeting and watching your costs and being very mindful of your spending, because this is going to be a great opportunity later this year to really accumulate wealth. And that's what we're about here on this show. So keep that in mind. Live your best life, but be smart. Ace, that's right, you broke your ankle. I was set up nice to my damn broken ankle. Ugh, that sucks, man. I know that hopefully you still got some of that copper wire on hand, and that is going to buoy your financial situation there, buddy.
Yeah, I hope you feel better, man. I didn't know that.
Yeah, that happened a while back. I saw some pictures on Twitter, but let's move past the DXY. We don't need to talk about the VIX again today. I see that's back up over 17. Still not high enough. It needs to go much higher. It will go much higher. Let's look at the NASDAQ, because I know you said this is ready to take a huge dump.
Yeah, again, this is the weekly. So obviously I'm looking at big structures and the macro time frame, because that usually tells us there's going to be a massive move at some point, whether it's up or down. I see three things here that make me bearish. Number one is that we're trading in this parallel channel. We're hitting our head, our bottom, we're just trading it. Now we're in the middle.
Hey, Kevin, real quick.
Yeah.
We got some breaking news that came out 10 minutes ago from Binance.
Okay.
This is from their official Twitter account. Unfortunately, today we are announcing that Binance will be joining other prominent crypto businesses in proactively withdrawing from the Canadian marketplace. So it looks like that's not great.
I mean, I didn't expect Canada. It's
I'm curious if that's going to set them up though to eventually withdraw from the U.S. as well for Binance US. But I thought that was interesting. It happened, 5 minutes into our show, so I figured it was worth bringing up.
See how BNB is reacting. It's all right. It's
crypto as a whole didn't take a dump. It moved down just like a little bit, but it didn't really crash or anything. So
yeah,
just an interesting little piece of news that we got on this Friday afternoon.
Yeah, absolutely. And everyone knows how bearish I am on Binance. Again, I don't know if it's necessarily Binance that's doing things. I think that they absolutely manipulate the market. That's my opinion, though, just based off of a lot of what's going on from, BUSD to now true USD. A lot of people are finally starting to wake up and realize that they've been pretty much swapping buy orders with true USD. They're printing free money with Paxos, and that's not a good look for them. But at the same time, we also know that the SEC is absolutely going after these crypto exchanges post FTX and Binance. They seem to be, thinking of less favorably. I'm sure if Binance gave the U.S. government tons of money, they wouldn't be as big of an issue. But since they didn't, they've just been swapping and taking all that money for themselves. Yeah, they're going to try and do everything they can to run them out of this country and possibly put them out of business. Again, I've said it before. The one thing that's going to hurt Binance more than anything, it's not going to be Binance US going away. I agree with Ace. Binance US is probably going to be going soon, but they're most likely going to try and hurt the exchange token because, hey, who owns 70 to 80% of that token? Binance. You want to hurt an exchange that's out of your jurisdiction? Attack their coin. So either they have a massive fat short position from all the Bitcoin they're selling, or, I don't know, maybe they're just, they know something that we don't, and Binance could potentially end up offloading a lot of that. So BNB price, definitely keep an eye on that. Back to the NASDAQ though, because I think that's, this is also something that's, give me ultra bearish indicators here. We're trading this parallel channel. This is a bear flag 100%. These tend to break to the downside. We're trading one up here, break to the downside, here, break to the downside, trading in one a little bit here, break to the downside, even though this is more of a bullish structure set up here. Now we're in a, downwards trend to the, we're in a bear market. This is a downward trend. We've been trading this for a while. This is since October of last year. We had the little break here and we came back up. We're trading pretty well in this, and I'm seeing parallel channel mixed with the 50 to 200 being extremely close to each other. And if we look down here on the stochastic RSI on the weekly, we are at 98 and 97, which is extremely high. The highest you can go is 100. So you're pretty overbought on this. And the fact that we're starting to see, less movement towards the top of this channel, and we're kind of just in the sideways in the middle, tells me that there is going to be a move at some point. Again, when is this move? I don't know. This is like watching paint dry, to be honest. But when we look at the macro structures, when these things do break, let me see if I can find another one. That's COVID. Yeah, that's not a fun one to use. Let's go to 2008. Yeah, I'm still tired of COVID and that fake recession that was. But see if we can find one here. Yeah, trading up this way. This is May 2008. March to May, saw a little bit of a rally, and then right into June, crash, little summer rally, crash. But this is a bear flag here too. You see the pole, it's trading sideways, breaks from it, obviously, and then this one was this is capitulation right here. There's no better way to say that. But I think that the NASDAQ is going to crash at some point. We're trading this flag for way too long. We need to see some rejection out of this channel. I think when we do break out of this channel, though, it's going to be a pretty massive move. And again, this is the weekly. Let's look at the monthly. I haven't even checked the monthly for this. Yeah, monthly is getting extremely overbought too. So that's not a great thing to be seeing. Looks like this moved up pretty quickly from this rally here, not from September to where we currently are. So when this does break, and we got a pretty good gap between here and there, at least until we find some support, wouldn't be surprised if we see some massive negative price action. I'm sure it's the same thing for the Dow. Just, see, we're hitting that resistance right there. That's that 34 level. We're at 33.2 right now. Wouldn't be surprised if we break under 33 that, the market's probably going to drop 500-600 points from there. So we're getting overbought on the monthly for the Dow. Let's go the weekly. Extremely overbought. It looks like we're coming right out of it, and we're starting to see some of that sell off. But this is hit our head, hit our head, hit our head. Can't do this for much longer. This is clearly resistance at this level. You need to come down. And if we look at the weekly, 50's right there, 200 is right there for the EMAs. Those cross to death cross, you're going to come down again. S&P, this 42 level, now it's 41. We're just trading in it. There's the 50 moving average. There's the 200. So the one thing that I've seen going across all these now is how close the 50 and the 200 have gotten on the weekly. That's not a great sign. That's a pretty bearish sign if we're looking at that. Obviously, it looks like even though they're going upwards, they're getting, it's more of a narrow scope in which the distance is between the 50 and the 200. So that means if, a couple bad weeks, all you need for that thing to cross, and then that's probably going to spook the markets considerably. But S&P right now too, extremely overbought on the weekly. Let's see what the monthly looks like. It's climbing pretty fast. We have probably by the end of this month, we'll be up towards this territory. It'll be interesting to see, but again, trading the parallel channel, it's probably going to break to the downside. So across the major indices, with the dollar looking like it's primed to move up, and these are all pretty overbought and look like they're ready just for that drop, I wouldn't be surprised if the two are working in conjunction with each other to set up a place where the dollar is going to absolutely tear while risk assets are going to absolutely drop. And that could be also in conjunction with some type of news or data that we get that spooks the markets completely. So this could just be, a double whammy, the dollar pumping while these are going to absolutely just dump.
Yeah, I gotta wonder where we're gonna go for the S&P. Like, I don't think 3,600 is out of the realm of possibilities.
Oh, that's too high for me.
I don't think it's gonna go lower than that personally, but
I'll say 32 at least.
You're saying at least?
At least.
Kevin, I know you're bearish, but that is a whole other level right there, my man.
I think that we are, past few days I've been thinking about it. I do think that we're in a worse position than 2008. I really do. I think we're lying to ourselves even worse. And I think we're just stuck in a place where people are, not accepting reality for what it is. And we're just hoping for things to get better. But there's also going to be we saw three of the largest banks, not largest, three pretty big banks, similar to Washington Mutual collapse. And this year, and Washington Mutual was the biggest one that collapsed in 2008, right? Nothing has happened. And we saw how many banks collapsed in 2008. It was insane amount. And we're at a point where the three banks that have crashed have been equal to the size of Washington Mutual. All the other ones were not nearly as big as Washington Mutual that collapsed back in 2008. I think the banking crisis is still a huge problem. And if the banking crisis is an issue, that means liquidity is going to be an issue, and that's going to hurt a lot of people from the top down. And I don't necessarily see a way where people are going to have cash on hand. So maybe there is a massive sell-off. Maybe people are going to de-risk and try and keep cash on hand. The dollar is going to be pumping. That might not be, we might be in an ultra sell-off or it's just an absolute downward spiral. What was the one thing that Michael Burry tweeted out a while ago? He probably since deleted it.
Yeah, he deletes everything. You can find it under that Burry archive Twitter account.
Yeah, but we might get into that death spiral where we're just, absolutely just selling off everything because people don't really know when the bottom is. I think we're going to get to a point where it's just going to feel like, there is no bottom. It's going to feel like that mentally. Obviously, it's not going to be in the charts, but it's going to be a considerable, push to the downside. That's just my extreme bearish outlook. But I think that these indices are, when they do go, they're going to go. Like, it's going to be bad.
Yeah. I mean, listen, I was watching Bloomberg this morning. There's a guy on there. He's like, yeah, I think, a 5 to 10% move to the downside is probably where it's going to end. And I was just like, oh my God, Kevin, I would love for Kevin to have heard that one because he just would have probably peed his pants laughing a little bit. I think 10% minimum. That's like best case scenario, 10% move to the downside for the indices with, 25 to 30% down from here not being out of the question.
I have no faith in Congress stopping spending, and I don't have faith that this is going to be the administration that is able to absolutely rectify this inflation crisis and these banking crises. This is not the best position to be in where we currently are. And again, that has nothing to do with political affiliation. I just think that everyone right now is absolutely incompetent. And this might be very similar to how it was in 2008. There was just absolute incompetency. And, it's a mixture of stupidity and just fraud. And I think watch The Big Short. I think that's the best explanation to show how people were back then in terms of, people on positions of power, especially in the financial industry. I don't think we're very far from that type of mindset right now.
Okay. Yeah. It's just fun time to watch all this play out. We're seeing a little move to the downside here as the week wraps up. This is when we usually talk about seeing, the final 30 minutes of the trading day for TradFi, people closing out their positions one way or the other.
Oh,
And
Bitcoin, what did you do?
Bitcoin just took a nice little leg down. Same for ETH.
We said it. We said it on the show, that 25K level, there's, $300 million worth of liquidity. So they're tapping that right now. Oh my goodness, right? Look at that, 25,984. How many bulls thought they'd never see this number again?
Here we go. Oh man, it is.
Woo!
This is kind of, I mean, I know we got to wrap up here in a second because you got to go do like some other stuff, but this is kind of fun to watch play out in real time. Bitcoin is taking a hit.
Oh, I can't wait to check my shorts. I'm not talking about my the ones I put on this morning. I'm not afraid.
I know what you're talking about there.
They're not brown, I promise everyone. I'm very happy right now. My shorts are clean. But
my shorts are clean.
Maybe not for a lot of people who are going long. Like this is just wiping out people. Like this is tons of liquidity that just got tapped. You know what? Let's do this real quick. Let's go to CoinGlass just to see what not the funding rate, but the liquidation level. Yes, I want to leave the site. All right, go to total liquidations. In the past hour, 103.8 million just got liquidated. Remember I said there was 300 million in liquidations around this level? So people were probably closing this, and in the past hour, we just hit 103. That's a third. That's pretty good. If we look in the past 24, oh no, that's in the past 24 hours. My bad. Past hour, it's 12.8. So, okay, we got further to go. We'll get there. We'll get there, guys. 24, 25 was my level. I thought that it's, possible that we'd hit for liquidations. It's also seems like that one move that we're talking about for the, head and shoulders pattern. It has to find some support somewhere around 24 to 25. There is an ultra bearish case though, that we go to 22K. I'm not going to count that out. I'm also not going to get extremely greedy, but if we want to see that head and shoulders,
can it wait until
7 days from now?
I'm so mad right now at Chase Bank for holding my money. Like I've been waiting. I knew I had this cash coming. I've been waiting for the opportunity for the markets to take a shit, and it's happening in front of my eyes. It'll probably keep going, and all I can think is I can't even take advantage of it because goddamn Jamie Dimon and Chase Bank are just holding all my money. And it's just not all of it, but they're holding a big chunk of money. And it's pissing me off.
Yeah.
God.
Well, dude, I told you the other day how stupid ACH is. I threw a ton of money on Coinbase, and I had a little bit left over that I was trying to send to short, send it to the exchange so I could short, the market. And it was like, oh no, you can't withdraw it. It hasn't been the full 7 days yet. I'm like, what do you fucking mean? You said it was gonna be, available for withdrawal on the, May 10th, and they're like, nope. So I had to wait, and then the market just shot up where I would have shorted, and then it went down. So ACH, these banks, I hate them. And this is all you're gonna need to know. The crisis is not over. I hope you were able to pick some up, when this finally does bottom, use some of that money. But for right now, it's just like these banks are not done with. And even though we're seeing some blood in the markets right now, we are far from over. This is way bigger than just the banking industry too. The banking crisis is going to be encapsulating the entire financial market.
Yeah, and the worst of it, like from my limited understanding, and I want to learn more, the commercial real estate crisis isn't really going to get kicked into high gear until like next year in 2025. So there's no time to get complacent at this point. Like it's going to be, I said during some of our shows on our other channel last year that I was like, I really hope this doesn't turn into a lost decade. And the further it goes, the more I'm just like, fuck, is this going to turn into a lost decade? Like, it's not feeling good at the moment.
It's definitely a multi-year bear market for sure. You can't refute that at this point now. We're going to go into 2024 bearish, most likely. Maybe not to the full extent that we are currently because we'll be made some progress by that time. I don't think it'll be a lost decade. And the only reason I think that is because the entire global economy is not the United States. I know that we're one of the largest ones, but at the end of the day, there's so much more money to be made around this world. I think people just limit their horizons to, the country that they live in. If it takes us moving to Portugal, to Ireland, any of these other countries where you could make some pretty good money and they're tax friendly, then so be it. But I think that's there's going to be a lot more money in different parts of the world than the US. And I think that that's a huge reason why that's, crypto is going to be amazing going forward. That's the most bullish thing you will ever hear from me, JWeb. I guarantee that's the most bullish statement I will make during this bear market, is that I'm optimistic for the world outside of the United States when it comes to keeping the price of Bitcoin and allowing to see these pumps. I think most people who make a lot of money are also going to be leaving the US too. So maybe they help us out in the bull run for 2025.
All right. I think that is where we're going to wrap it up for today. We're seeing some red. Bitcoin is trying to come back over 26. We'll see if that happens.
No.
But it's moved down considerably today.
Go to bed.
I'll wrap it up. Go to bed. Go to bed. You're drunk. We are going to be back on Monday, same time, same place. If you have not yet, hit that like button for us. Subscribe to our channel. Drop a comment. Share us out. We appreciate all the support. Hope you guys have a great weekend. Wish your mothers happy Mother's Day if you're still able to do that. And we will see you next time.
Take care, everyone.